This is Fintech Insider News. This week, internet chaos eases as AWS bounces back from day-long outage. Splitwise supercharges payments in Europe with Tink's pay-by-bank expansion. And Revolut finally lands a banking license, but not what you think. We'll be discussing all of this and more on today's news show, so don't go anywhere. This episode is brought to you by Infuse, where agility meets scale, where compliance meets confidence, and where bold ideas become reality. Find the only place where card issuing and processing comes with happiness built in. The Infuse modular next-generation platform gives you exactly what you need, from BIN sponsorship and scheme access to compliance and fraud prevention, while you stay in control of your customer experience and roadmap. Infuse, innovative card issuing and processing that fuels innovation. Discover more at infuse.com. Does moving money across borders feel scary? This episode of Fintech Insider is brought to you by 3S Money, a fintech scale-up that makes global payments simple, predictable, and human. With 3S Money, your business gets multi-currency accounts and local IBANs, enabling you to send and receive payments in all major currencies, reaching the widest possible range of destinations. You'll also have a dedicated account manager, a real person, not a chatbot, guiding you through every step of the way. Enjoy the best FX rates, fully transparent fees, and premium service backed by regulation you can trust in the UK, Luxembourg, UAE, and Hong Kong. Go global with confidence. Open your account today at 3s.money and find out more. Hello and welcome to episode 1009. Gosh, it's such a huge number of Fintech Insider, brought to you by 11FS, the 5-time consultancy of the year that works with banks, investment firms, digital banks, and fintechs to build the next generation of financial services. I'm David Barton-Grimley, Director of Strategy and Head of Product here at 11FS. And this week, I have somehow managed to do 2 speaking events on the same day and also somehow do tons of client work. It's been a lot. Actually, I was at the Open Banking Expo in London. We're going to be talking about open banking on this episode, so lots to talk about there. And I did a great debate at night, which is the very first time I've actually debated quite spicy fintech topics on stage with a bunch of extremely incredible people. So that was a lot of fun with Fintech Fringe. So go and check that out as well. So on to the news. This week, AWS outages caused chaos across a whole range of markets, from smart doorbells to banks, wonky alarms, and even ruined Starbucks orders. Later in the podcast, we'll dive into what really happened when the cloud went down. But here on Fintech Insider, we're still running at full capacity, much to your relief, and 3 people who were completely unaffected by the outages and definitely running on all cylinders are our panelists. So let's meet them. And first up, it's a very warm Fintech Insider welcome back for Ian Morrin, Head of Payments at Tink. Welcome back to the show, Ian. Great to have you back. We'll be hearing more about what Tink have been up to. But Ian, tell us a little about yourself.
Yeah, hi there. Thanks for having me back. I was also at Open Banking Expo this week. I think many people were, and also got the opportunity to have a pretty interesting conversation with some couple of people from Chip and from JP Morgan at the same time. So that was really interesting around where we're all going, what we're doing, how we're finally going to, how we're going to keep the sort of growth of open banking payments on the trajectory that it is. So that was super exciting. Lots going on. I lead the payments business for Tink across Europe. So anyone who's not a bank, effectively, is my customer in the Tink payments ecosystem. But good to see you all. Good to be back.
Amazing. And yeah, we've got one of those customers coming up on the show to talk about. And next up, we have a fintech debut for Marusha Naidu, Global Head of Partnerships at Paymentology. So Marusha, welcome to the show. Tell our listeners a little bit more about yourself and your role at Paymentology.
Thanks so much for having me, David. And I have to say, I'm so excited that this is my debut. Thank you for having me. So like you said, Marusha Naidu, Global Head of Partnerships at Paymentology. Who is Paymentology? We are a global issuer processor. We operate across UK, Europe, Middle East, Africa, LAC, and APAC. My role specifically is to curate the strategy for our external partners and really hone in on when to build, when to buy, when to work with phenomenal partners who really make our ecosystem strong and powerful and, the best globally. And actually, we launched something really exciting this year, which was our very own Issuer Academy podcast. And I'm the host. So maybe we could have you on sometime, David.
Yeah, would love that. That's awesome. Yeah, amazing. Welcome to podcasting.
Thank you. It's harder than it looks, but it's a lot of fun. So I'm so glad to be on the other side of the table today. Super excited to be here. And great to be with Ian and Pablo as well. So thanks.
Awesome. And last but not least, it's a FinTech Insider return for Pablo Viguera, co-CEO at Belvo. Great to have you with us again, Pablo. What have you been up to over at Belvo since we last spoke? I know you've also recently released a direct debit report. Tell us a little bit about that.
Yeah, thanks. Thanks, David, and pleasure to be back. I think it's definitely been more than a couple of years since I was last on the show. I know you've had my co-founder not too long ago, but it's great to be here. Great to talk about all things open banking, open finance. So at Belvo, we're the leading open finance player in Latin America. We currently operate in Mexico and Brazil, and you can think of us as the open finance partner for leading banks and financial innovators in the region. So we work with the likes of all the large banks, so the BBVAs, the Santanders, the Bradescos of the region. But we also work with the large neobanks, with Nubank, with Revolut, with Mercado Pago, and the like. Found the company in 2019, so we've already been at it for almost 7 years now. And as you mentioned, we recently published a direct debit report. Obviously, part of what we do, given our open finance remit, is data. Part of it is payments. We've been growing a lot on the payment side of things. And in Mexico, one of the payments products we deliver is direct debit, right? So we orchestrate direct debit via our own proprietary payment network. And we actually released a really cool report that talks about the growth of direct debit in Mexico and, generally the growth of account-to-account payment methods. So, it's been a great run.
Yeah, that's amazing, and it's definitely growing all over the world. So yeah, keen to give that one a read. All right, now that's our panel. Let's go into the news, and this one's from FinTech Magazine, and as promised, AWS outage, a major risk for the financial sector. I mean, I would say maybe yes. An outage at Amazon Web Services affected millions globally, disrupting services from major financial institutions like Lloyds, Barclays, and HMRC in the UK, as well as platforms globally such as Zoom, Slack, and Fortnite. So it affected so many different organizations. The incident originated at AWS's North Virginia data centers, impacting critical services like DynamoDB and EC2, which are essential for payment processing and core banking applications just about everywhere. This outage adds to a history of AWS disruptions, including significant incidences in 2012, 2021, and 2024, highlighting the persistent risks associated with reliance on just a few major cloud providers. Experts emphasize the need for financial institutions to develop robust, resilient strategies, including backup systems and alternative data routes to mitigate the risks of such outages. I mean, I find this absolutely, in some ways, inevitable. I mean, there is going to be outage and downtime, but also terrifying as we become more and more reliant on cloud providers. Was anyone affected by this? Anyone's businesses, or kind of know anybody who was? What do you all think about this? Opening it up. Terror.
Silence. I was going to say is that I know it's like I think. Well, we weren't impacted by it. You obviously see it. It's very public when it happens because the impact that it has sort of spreads across everyone. But I think it just underlines the importance of building out resilience in the way that we're operating across the industry and making sure that we've got everything in place that we can to keep things operating. But and it's very public when it does go wrong.
Yeah, I couldn't agree more, Ian. When we look at it, luckily we were not affected, right? But it's such a balancing act because the reality is there are always going to be outages. It's how you really mitigate and balance out those risks. Because being cloud first, at Paymentology, we are definitely cloud first. It's a huge part of our global strategy in order to obviously, scale with customers faster, be more resilient, have better security. But at the same time, it's also about making sure that, we don't have a concentration risk. So what we do is we create resilience by having a multi-cloud provider structure. And so we're able to fail over quite quickly if there is an incident. Because the reality is, and we're all in payments, there will always be an incident. That is inevitable. It's really about how quickly we adapt and, react. And it's really about proactively, making sure that you are designed for architecture failures. Right. What I will say, and actually this came from our CTO, is the most important thing is to, make sure, like we said, be proactive about how you actually build, avoid cloud lock-ins, which is, what we've done at Paymentology. But I will give it to AWS. They responded really quickly. Their communication to customers was clear, concise, and, I think the people who were affected knew that they were behind it. And I think that also shows that they're taking it seriously. Having regional instances of cloud hubs is also very important for mitigating risks. But thankfully, we were not affected, but it did show that AWS are, they're planning for how they react.
That's such a good point.
I think consumers are getting more used to it to a certain. And that's not saying that we should all accept it. I think it is clearly super important that we build for resilience. But it wasn't so long ago when there was a similar outage and Meta went down with Meta, and everyone thought the internet was broken, and it wasn't. It was that Meta had gone down. I think those kind of instances, the public is becoming more aware of it as well. There is a responsibility on us all to build in that resilience and work with, our technology providers, regulators, and everybody to make sure that we've got the most resilience we can. But there's also, I think, a little bit more recognition from consumers generally that very rarely something might go wrong. And that it's important that you protect them at the end of the day, and that there's no permanent sort of impact on that consumer.
Yeah, and just building on Ian's point there, I think it's also relevant, not because, end users or customers might have gotten used to it, but I think it also shows how important it is from customer communications perspective, because you see like brands responding in very different ways to these outages, right? So you see brands not saying anything at all and just being like, well, look, it's just one of many that have happened, that happen, and that will happen. And you see other brands that are, just like front and center being like, hey, this is what's happening. This is how it's affecting us. This is what we're doing about it. And this is how we're thinking about the future, right? So I think it's also important there. And it also reinforces, kind of that trust also, especially in critical industries like financial services where, hey, like, yeah, a payment can not go through, but it's like, it can be very, very, very disruptive if a payment doesn't go through, right? It's not, you paying for your Starbucks latte, right? It can be something much larger, much more critical than that. So I think just the way brands also respond in these situations is really important, and it sets folks apart, right? So if you're banking with two institutions and one of them sends you a push notification right away and says, "Hey, this is going on," they're going to build more trust than the other brand that you bank with, and they don't tell you anything.
So interesting, this debate, because it's almost as if we may have to get used to more outages anyway. I mean, if you just think about the more digitization, the more people are putting things on the cloud, the more likelihood that there is for failure. And so, accepting that and having those communication strategies in place is very important. There's also a stat here as well, which is just kind of staggering, that I want to read out, which is that despite the disruption, Amazon shares rose 1.6%. So what the hell does that mean? I mean, does that mean that, to what all of you are saying, that actually people are just being like, well, it happens, and actually they responded incredibly well, as you're saying, Marusha? Or is it that there is something very dystopian going on here in that, data center growth is just growing like exponentially when you think about GPUs and all of the AI type stuff? I mean, that for me is almost just crazy. Like, what's going on there?
It is an interesting outcome. I don't claim to have insight into how their share price grew, but yeah, I mean, it is really interesting. But I think that, they did, to Pablo's point, they had, and both of you actually, they did handle it well. They communicated, they owned it. There wasn't the let's try and blame somebody else for it. They owned it straight away, and they were super clear about it. And I think that's the trust bit.
Yeah, and I'll add to that. It's always about, people don't remember how long the outage lasted. It was about how it was managed. And I think, chatting to our CTO this morning, he was kind of like, it actually promoted confidence in him that if there is ever a problem, AWS is going to be there front and center next to us, supporting us through any challenges. And so that obviously shows that the trust in the communication and the brand carries, so much further than just one outage. It's about a long-term partnership. It's about a long-term strategy. It's about saying, look, yes, there will be issues, there will be incidents, but at the end of the day, the pros definitely outweigh the risks, especially if you have a partner who's willing to, like Ian said, own it and take accountability.
Yeah, right. And the truth is, we live in a much more real-time world. If you rewind the clock back, 20 years, people were very used to the idea that, I remember banking apps would shut down in some ways, right? So you would go online and you would just be, open, like online banking would just be down. And that's what people were used to. So if we're used to much more real time, then maybe we should all just get used to a little bit more downtime and how some of those companies respond to that. I just wanted to play all of you a little clip because we actually did a very interesting episode on outages on this very topic back in May of this year. And I sat down with Mate Pfeiffer, who's the group CTO at Monzo Bank, really inspirational guy. And he was talking us through how they view outages and some of their approaches to resilience. So here's the clip. So let's talk about Monzo Stand-in. Mate, what is it?
So let's talk about the primary platform. So this is the platform that, serves the majority of traffic 24/7. Think of this as several thousand individually simple, loosely connected components working together to service customers. Yeah. Those things run in data centers, usually multiple locations. And so lots of moving parts. And occasionally things go wrong. For example, server hard drives will intermittently fail, right? Power outages will happen. Some part of the network is going to have intermittent fluctuations and failures, which will cause some badness in the system. You don't need Monzo stand-in for that. The system is distributed, it's resilient, and typically when individual components have issues, the rest of the system is resilient to those failures, will step in and continue to service the customer. So the customer won't even notice that a drive in a server has just been replaced, for example. Yep. That's what the primary platform does. So then you have to think about, well, how does this go drastically wrong? And at a high level, it's probably two potential root causes. And they're both obviously extremely unlikely, but they are plausible. So you want to protect against that if you want to have a high level of resilience. One is that your cloud provider has a serious technical issue that's affecting multiple data centers in multiple locations, as an example. Yeah. The second likely root cause is if we make a change in the system that causes all sorts of error conditions, which are difficult to roll back, for example, like hypothetical examples of how things could go very wrong where your normal good operational resilience isn't enough. So we thought, well, how could we fix that? And the team went away and came back with the idea for Monzo stand-in, which is basically, well, let's take both of those things out of the equation.
All right, so we will leave a link to that episode in the show notes for all of you to listen to. It was a great conversation, so please do deep dive and go in. And on to our next story, and this one is from Fintech Finance News. Splitwise expands Pay by Bank across France, Germany, and Austria with Tink. Splitwise and Tink, which is a Visa-owned open banking platform, are expanding their partnership to introduce Pay by Bank in France, Germany, and Austria. In the UK, Splitwise has already seen a 150% increase in Tink fintech-powered account checks and payment initiations this year, showing strong early traction. Previously, users needed to leave the Splitwise app and manually initiate bank transfers to settle the balances. Boy, do I know that, by the way. Boy, do I know that. We'll talk about that in a minute. The new integration lets them link their bank account and pay directly in-app with fewer steps. This rollout aligns with broader growth in open banking. Global users are expected to grow from 183 million in 2025 to over 645 million by 2029. So obviously, Ian, we're going to come to you first on this. And yeah, I mean, as a historic user of Splitwise, that has always been a big, like, why can't this just do it in the app? And now you guys are helping them do that. So yeah, give us more detail.
Yeah, it's. I remember when we first started talking to them, and every now and again you get customers come along where the whole office goes, "I want us to solve this problem. I love the app. Don't like this bit of it. We all use it. Please, let's help solve this problem." So I think there was a lot of investment from our team as well to work with them to make sure that this worked super well. We launched in the UK, as you alluded to there. We've done some pretty interesting. We don't do much above the line. You don't see a lot of above the line type advertising and campaigns, but I don't know if anybody saw it, but over last summer, we had a series of physical displays and video walls in the airports and stuff around Splitwise, and it was a Be Wise use Splitwise. So it was a play on that, and there'd be a scenario and then a Be Wise use Splitwise,
very cool.
Which worked very well. And we saw, actually, it's one of those, you see the campaign and you saw the growth come as everybody's going on holiday and then setting that up. But great business to work with. They're super keen to push out. It's gone well in the UK, so launching out across Europe, expecting it to grow in similar ways. If you look at the user base across Europe, it's significant, so expecting good things from it.
Yeah, I can imagine. I mean, are there any specific behavioral changes that you've seen, or is it literally just adoption and use, I can imagine? As you said.
Yeah, I mean, for those that don't know what it is, it's an
we should define that.
App.
Yes,
so,
sorry.
Yeah, so we didn't do that.
Ian. Yeah.
So it's an expense sharing app. It's dead simple. You just add your expenses as you go. Some people use it if they flat share. I know some couples that use it, and then it's often used by friends when they go on holiday to split their expenses and settle up at the end. And now it's dead easy. You just hit pay and it sends the money where it needs to go. So that's pretty cool. I think the trigger points, you need to do an account check to onboard. So to validate, if I want to get paid, if I want to get money into my account, I need to validate it's my account. So that's often the first step that you see into that onboarding. So what we saw when we did that campaign back in the summer was that as soon as that went live, we saw the number of account checks, like on our dashboards, just went straight up vertical. You could see from day one, it was really interesting.
Wow.
As soon as it went live, you could see the trigger and the graph. So that was the first indicator that people were picking it up, and then we watched the payment track grow after that.
Very cool. Pablo, I'd love to bring you into the conversation to get your broader perspective on open banking growth in Mexico and more broadly. Like, what are you seeing the emerging use case? Are you seeing stuff like this taking off?
Yeah, I mean, the countries where we operate, so Mexico, Brazil, I would say are definitely at the forefront of open banking, more broadly open finance in the region. There's definitely, many differences with what you see or what you interact with on a daily basis in the UK and Europe, or even in the US. I think, what we've seen, we've been operating for the past 6 years. The first 4 years, I would say, most of the use cases that we saw working either with, financial institutions or fintechs or even, large tech businesses was mostly focused around data. And in data, mostly focused on credit and lending. So how can you underwrite better with open finance data, right? Either coming from banks or coming from a myriad of other data sources, which I think that's one of the specificities of LATAM, which is, there's such a large unbanked or underbanked population that oftentimes the role that we play as the kind of, the all-in-one regional open finance platform is that we do all the, the dirty work of like putting all the sources of data together, making sense of them, and then just serving them onto a platform so that if you're a bank and you want to validate income, it doesn't matter where it's coming from. It doesn't matter if it's coming from a bank. It doesn't matter if it's coming from, the tax authority. It doesn't matter where it's coming from, but you get a verified income from your end user. So we saw a lot of that. We still see that in great measure, but for sure payments has taken off in the past 2-3 years. Initially what caught on, and this is not necessarily like open finance related. So account-to-account payments has had a very big penetration since it launched in Mexico and in Brazil. Brazil, you're probably familiar, the audience is probably familiar with Pix, kind of a global standard in how peer-to-peer payments has to be done and launched and scaled. But as of late, we've been seeing a lot more of not only one-time payments, but more recurring payments, variable recurring payments. And that's kind of where the beauty of open finance comes in, right? And a lot of the stuff we've been building as well is on these, recurring payments use cases where, hey, you just connect the bank account and, you let the magic happen, right? Because, you have a lot of people in Mexico, Brazil paying bills, repaying credit cards, the same as you have in the UK and the US or in Europe, right? So over the past couple of years, we've been seeing a lot of growth in, open finance powered recurring bank payments.
Yeah, it just makes sense, right? It just takes so much friction out of it. It's so interesting, Pablo, with all of those use cases. Marisha, I'd love to bring you into the conversation. I mean, what's your views on how the two kind of sit side by side?
Yeah, this is such an exciting conversation because the reality is we are, such firm supporters of account to account, whether it is, pulling into a wallet or a mobile wallet or another bank account, or whether it's P2P payments like Splitwise and what Tink are doing, or whether it's cross-border kind of remittance. I think it plays a fundamental part in the customer experience because the reality is when you look at banking, it's not just about supporting one kind of use case. It's about really looking at the customer and understanding all of the different needs that customer has. And I think when you look at account-to-account payments as well as card, they're complementary. It's two sides of the same coin. It's just innovation in different areas. And it's really providing, optionality for customers where they can say, actually, I'm traveling, I'm going to need my card because I'm going to Mexico, which is still quite a cash-heavy market, and I'm going to need cash, while still being able to say, okay, but at the same time, when I'm in Mexico, I can transfer funds to, my friends that I'm traveling with so that we can split the expenses. So it's really complementary, and it's really about saying, what are we trying to solve? What are the pain points that our customers have that we need to bring together different types of innovation and payment instruments to really answer that? How do we help them live better each day?
Yeah, it's such a good point because I think from a UK or a Europe perspective, is one of the things we've done a lot of work into this area, a lot of research, is that there are absolutely payment types that just totally make sense for open banking, but there are absolute payment types that just still totally make sense for cards, right? Small purchases, retail, all of that kind of stuff, and so having the two exist side by side, I think is very important. Ian, I'd love to come to you for a final word on this. Just picking maybe up on my point about Europe. What are the kind of things that you are thinking about next to improve adoption in Europe?
Yeah, I think that there are. I mean, you touched it. There are some use cases, and this was one of the topics actually on the panel chatting with Chip at Open Banking Expo. If you have an account funding flow or a top up flow, and you're not using a pay by bank component to that, you're probably behind the curve today. So it's sort of, where else does that fit in? Pablo touched on recurring payments actually. So we see, sweeping variable recurring payments in the UK. So that's a me-to-me payment that's growing rapidly. I think the next step on from that is a commercial VRP type capability that there was a lot of chat at Open Banking Expo about. And we're one of the founding sort of members of the Visa A2A scheme that's launched in the UK. Some news on that coming in the next few weeks. Maybe we'll come back and have a chat about what we're doing with that. That's going to enable account-to-account payments in a consumer to business flow. So what Pablo was describing there. So you suddenly expand that recurring payment into being able to pay bills, maybe pay subscriptions, and at some point down the line, maybe get into the e-com space in there. So you suddenly starting to see the different options that are available in that. I think so that's sort of one thing is just from a product perspective, how do we bring some of those to market? And then how do we work with our European stakeholders to bring similar sort of capabilities? There's already, Gyro API in Germany is looking to do something around the recurring, or is doing something around the recurring scheme. So, how do we get involved in those things and make that available to our customers? I think that is really important. Then just the hygiene stuff, which is continually looking at user journey. How do you make that as simple as possible? There's a lot of requirements on us from a regulatory standpoint. There's more of those coming down the line. How do we build that in an intelligent way that means that you build trust and confidence with the end user, but actually you make that journey as simple and easy as possible? That the chip description was it's invisible. The consumer doesn't really know they're using open banking, which is phenomenal, but doesn't actually help me from an adoption perspective, because if you don't know you've used it, next time you see it, you don't necessarily know what it is. So we've got to get over that. It's so good over here that if you come across it somewhere else, you might not actually realize that you've used it before. So we've got to work on how we actually transition between those two things.
It's so funny, that open banking branding problem. And actually at the Open Banking Expo, it was interesting to see the expo is called Open Banking, but almost no one was referring to it as open banking.
No.
It was pay by bank, and in some ways that is better because it feels like the industry has moved forward. But you're right, if it's that passive, then
an account top up isn't a pay by bank. So the other thing that we're all debating is, well, what do you call that? That's
right.
Because I'm topping up my account. I'm not paying. I'm topping up my wealth account or my savings account. It's not payment per se, because I'm sending money to myself. So how we payment. What do we do? This is the nuance of these are the things we talk. This is 2 days of being at Open Banking Expo, though. You
very
much
much
properly in the weeds.
I was going to say this is some geeky open banking chat, but love it. And actually, just on that note, we're going to take a quick pause here. Back shortly.
At Talus, we know cybersecurity can be tough and you can't protect everything, but with Talus, you can secure what matters most. With Talus industry-leading platforms, you can protect critical applications, data, and identities, anywhere and at scale with the highest ROI. That's why the most trusted brands and largest banks, retailers, and healthcare companies in the world rely on Talus to protect what matters most: applications, data, and identities. That's Talus, THALES. Learn more at talusgroup.com/cyber.
This episode is brought to you by Indeed. Stop waiting around for the perfect candidate. Instead, use Indeed sponsored jobs to find the right people with the right skills fast. It's a simple way to make sure your listing is the first candidates see. According to Indeed data, sponsored jobs have 4 times more applicants than non-sponsored jobs. So go build your dream team today with Indeed. Get a $75 sponsored job credit at Indeed.com/podcast. Terms and conditions apply.
Before we dive back into the news, a quick word about our latest Insights episode. This week on FinTech Insider, we have something a little bit different for you. I recently attended the very first Money 2020 Middle East in Saudi Arabia, so lots of endless quantities of Arab coffee, which is absolutely delicious, free swag, and an inspiring startup scene. To dive deeper, we're revisiting an episode from a year ago that's still spot on. Benjamin Ensor is joined by Gaia Lamperti, Ziad Mebsut, and Remo Abadondolo to explore the opportunities and challenges of launching fintechs in the Middle East. So whether you're expanding into the region or just curious about its fintech landscape, this episode is full of insights. Check it out in the same podcast feed as this one. And now back to the news. Okay, so this next one is from Business Wire. Paymentology launches Paycredit to power credit innovation for digital banks and fintechs. Paymentology has launched Paycredit, a cloud-first credit ledger platform designed to help financial institutions create flexible, feature-rich credit products quickly, overcoming the constraints of legacy and debit-based systems. Designed for modern credit needs, Paycredit supports revolving balances, installments, and buy now, pay later, or BNPL, allowing issuers to tailor limits, interest rates, billing cycles, and repayment models. Already adopted by digital banks, Paycredit helps issuers launch credit products without full lending infrastructure. This aims to create new revenue streams, enhancing customer engagement in markets where debit-only offerings are limited. So, Marusha, first off, a huge congratulations on this launch, and of course, it only makes sense to talk to you about this. Having worked on projects in the sort of credit ledger world in the past, it is sometimes fiendishly complex. I mean, tell us why that is and how you're solving that problem.
Yeah, absolutely. So firstly, we are so excited about our Paycredit launch. This is something that's been in the works for a long time. And one of the reasons why it's been in the works for a long time is because you're absolutely right. It is complex. It is complex, but it's also very important to get it right and to build it, right from the ground up. So when you look at Paycredit, it's our new cloud-first credit ledger and issuing platform. It's purpose-built. So, when we look at it, it was built to help digital banks and fintechs design, test, and really launch modern credit products much faster. Whether it's revolving credit, whether it's installment plans, whether it's BNPL, it's credit built from the ground up. It's really interactive and when you look at things like billing cycles, nobody cares about billing cycles, right? But it has to work, and it's got to be configurable, and it's got to be something that is flexible, that works with the different digital banks and fintechs that you're working with. We also focus a lot on real-time data, and I think Pablo said it best. And funny enough, our very first Paycredit customer is actually going to be in Mexico, which we're really excited about. And it really is all about, data. It's about making sure that our customer have, real-time data so that they can make real-time insights and decisions. Data also allows our customers to make the right decisions around how they want to manage their debt. And so when you look at how we've built Paycredit, we have built it off nothing. We started from the ground up. We didn't take a debit card platform and try to retrofit it to make sense. We really said, look, we want this to be the most configurable credit card platform where customers can gradually, grow from, a very simple offering like BNPL, grow into, installments, and then, full scale revolving credit. So yeah, we're excited, and it's a lot of fun to be a part of this, especially when we look at Mexico being our first country. We're very excited about the launch.
And maybe just to sort of deep dive into some of those problems, because it can be really, really hard. And I guess what you're talking about practically is that you have systems that are way more configurable, and so therefore it's just much faster to build services. But also you can build more intelligent services. I guess is what you're saying. How long would it take typically to? Is there like a benchmark for how long it would take typically to put something like this together before this new world?
Yeah, I mean,
months?
If you look at it, right, a debit card program we can spin up in 4 to 6 weeks. It's really simple. It's very easy to implement. Whereas credit card programs typically took 6 months to a year on average, right? And It was because you're trying to square peg round hole, right? You're trying to create different interest rate calculations in a debit card world. It just didn't make sense. And so it was a lot of trying to make these nuts and bolts of all different sizes fit, and they just never really fit well. And so now when we look at how quickly it is to launch a credit card program, we can create testing within minutes, as in our customers can test out our APIs, create a ledger, create an interest rate calculation, which is specific to their market, in minutes. They can test out hundreds of transactions on our UAT simulator, within days. So now what we've done is we've taken a 12-month project and we've made it, 6 months max. And if you look at the customer in Mexico, it's actually less than 3 months. So we're really, really excited about just shortening that time frame to get a customer live on credit.
That's incredible. I'd love to bring in our other panelists on this, because I guess what we're talking about here is the march of real-time data and of digitization, and open banking is also an important part of this. I mean, is this basically saying we could eventually reduce the reliance completely on legacy banking systems? And Ian, what do you think?
That's a tricky one. Sat in the building that I'm sat in.
Maybe I shouldn't have gone to.
I think that what's super exciting, and actually, I was really interested to hear what Pablo was talking around the initial use cases being more around this area than perhaps where they are sort of in Europe, and we do see some.
Yes.
We do see open banking data used today in lending decisions. Is it everything it could be? No, it's not. There's still a huge amount of legacy. There's still a huge amount of looking in the rearview mirror to see what happened 6 months ago rather than looking at what's happening today into that data and making decisions on it. And we have access to and the ability to look at the data today and create dynamic lending decisions. It doesn't, if you've got people who are typically refused credit because they fail because of some legacy assessment that's been made. Actually, we have the information today to be able to look into their accounts and make dynamic decisions about how maybe they access credit and access other capabilities and facilities that they haven't got today. So I'm super excited by what is coming down the track, and what it really requires is just a bit more understanding, I think, from the risk teams in some of these organizations on how they use the data and how reliable it is and what insights they need to pull, whether that's using machine learning, AI, with more AI getting into some of the models that we have. Yes, we've got to make sure that's done properly and in a way that builds trust with the end users. But I think, huge possibilities coming down the track for how we use this in a thoughtful, combined way.
And if I can add to that, Ian, it's such an interesting point because, for example, we work in a lot of emerging markets, whether it's Africa, whether it's LAC, whether it's APAC. And a lot of customers, like you said, underserved, underbanked, they don't even qualify for a credit facility, right? And so what a lot of our customers are thinking is, okay, let's start off with something very simple like BNPL. Let's build financial literacy. Let's help customers to create credit histories and credit profiles so that they can gradually move up to installments and then eventually full-scale credit. So it's really about creating the thought process around how do we make credit more accessible to everybody by having these different layers and these different options of where is your customer right now? How much of a credit risk are they? Are we open to trust our customers and start to build out their history? So for us, it's emerging markets are key to building our credit. If we look at Africa, the penetration rates, and especially when you look at the penetration rates across male versus female credit adoption in Africa, it's scarily shocking. I won't even give you the stats, but those are the things that we need to change, right? And when we look, one of the reasons why we're so passionate about doing this, launching Paycredit, is because it really is going to not just bring in revenue for our fintechs and our banking partners, but it really is changing the economic landscape across emerging markets. So it's just so interesting.
Yeah, it's fascinating. Yeah. Banking the unbanked, as you said, Pablo, earlier, it's a huge, huge potential opportunity coming up. Anything to add?
Yeah, no, absolutely. And I think, look, when we think about, innovations like Paycredit, I think there's the kind that the region needs, right? And I think, if you look at especially emerging markets, the way, oftentimes the way people enter the money wheel is through credit, right? That's how people enter the money wheel. That's how people enter the prosperity wheel, right? So if they don't get access to a loan or, whatever type it may be, they can't invest, they can't prosper, right? So I think that's particularly relevant in the market we serve and, other markets like Marusha was mentioning, Africa and so on. But I think, it's also relevant, not only thinking about, how can we kind of create the, the engines or the models to, kind of issue credit, but it's also like, what's actually feeding those models, right? And I think that the lens that we bring here at Belvo from our work in Mexico and in Brazil is that even though still a very large portion of the population is unbanked, underbanked, or even if some say 40-50% of folks still have a bank account today, which one might think that it's a a relevant number, the actual principality or the transactionality that you get on those accounts is very slim, right? So even if you have a bank account, like you can't really tell, if that person's good for a loan or not. And forget about, because they don't have a loan, forget about getting a hit on the credit bureaus, right? So what you end up having is, even if you have these models or these innovations, if you don't have a way of making the invisible visible, it's not going to work for you, right? So I think that's kind of actually one of the problems we've been solving for a lot of our customers, which is, okay, so today we're serving X% of the population. We've never really thought about going beyond traditional data, right? And this is where kind of our concept of open finance kicks in, which is, as I was mentioning earlier, like tapping into additional data sources and turning them into, insights such as, okay, so I might be able to connect to the Social Security database, for example, or the tax database. And with that, I get into the weeds and I'm able to tell you how much money this person is actually making and if they're good for a loan or not, right? So I think, anything that, helps and fosters better decision making, better underwriting, more loan issuing with like better insights, 100% welcome. But obviously you need, the models are only as good as the data that powers them, right?
Yeah. It's almost like that hunt for data to help bank these people is driving innovation itself. And actually, Pablo, that's a really good segue into the next news item we have, and this is from Finextra. Revolut gets Mexico banking license. That was a segue. Revolut has received authorization from the National Banking and Securities Commission, so that's CNBV, and the Bank of Mexico to operate as a multiple banking institution, enabling full banking operations in the country. This move positions Revolut to tap into Mexico's significant cross-border remittance market, which saw a record $63.3 billion in remittances in the previous year. This move aligns with its global strategy to invest £10 billion and create 10,000 jobs, targeting 100 million customers by mid-2027 and entering 30 new markets by 2030. So no small feat. Meanwhile, Revolut continues to face delays in securing a UK banking license, a key milestone for expanding its domestic banking services. So first off, I think it's important to mention that Revolut has been operational in Mexico for a few years now. I think it's like 2021 or 2022 when it started opening operations there. But Pablo, what's your view? Why Mexico as that landing point in Latin America?
Yeah. Even you mentioned, Mexico being, a market that Revolut was, operating in or started, kind of working on since 2021 or 2022. Like I'm actually a former Revoluter.
Right.
I was an early employee at Revolut, and in my time, so in 2017, 2018, folks are already working on the Revolut Mexico expansion, right? So that's how far back it dates. But I think when it comes to like international expansion, I think the team at Revolut, doing a terrific job there. Just comes to like what big markets are there out there? What are our opportunities for our unique product positioning? And once the kind of the stakes are there, we go all in, right? And I think in Mexico, you find a lot of the right ingredients. It's a huge market, right? So second biggest country in Latin America, a massive proportion of the population still unbanked, underbanked, very strong banking lobby, right? So that the top banks, top 5 banks account for 60-70% market share. One single bank, BBVA, accounts for 35-40% of deposits and loans and assets market share. So very high concentration, right? And but still, on the flip side, a market that's very ripe for innovation, ripe for disruption. And you're seeing over the past couple of years how there's been a very big take-up, especially with younger generations with digital first product offerings. And Revolut is not the first neobank, and there's a handful of neobanks that and many homegrown and many regional grown that have been operating there for a while. But just the size of the opportunity, size of the market is just so big that it's a very, very attractive market. And I would say in the digital space, very much still up for grabs.
Right. Yeah, it's just also such a huge population. Is there, sorry, I feel like you touched on it a little bit there. I mean, is there something about the regulator as well that, makes Mexico more open for business maybe than some other countries in Latin America? Is there a real kind of push to boost the fintech sector that you see?
Well, we're also a regulated business in Mexico on like the payment side of the business. I will tell you that the Mexican regulator, as from experience working in other countries, like is not particularly friendly when it comes to fintech, or even when it comes to you getting a banking license from scratch. But I guess in Revolut's case, and in other upstarts or digital banks that have gotten their licenses over the past few quarters or years, or you see Nubank, for example, they started with a kind of like a lending type of license where they could issue some products, and now they fully transitioned to a banking license. You see Mercado Pago also transitioning to a full banking license. I think the requirements are clear, and if you kind of file your if you submit your file and everything kind of makes sense, you check all the boxes, you'll get the license, right? So there might be some delays here or there, but I think in the specific case of Revolut, like you might not get the level of scrutiny that you might get in other parts of the world where you might have already been operating for a while. You're maybe like a larger digital incumbent. I think here in the case of Mexico, Revolut just starting from scratch. They had everything set up properly. Did a great job. Working on all the basics, on all the infrastructure, on getting everything set up, and they got it by just following what the regulator said. But by no means I would say the regulator in Mexico is particularly friendly, especially if you compare them to Brazil, for example, where the regulator is much more pro innovation. They're much more in favor of kind of digital banks kind of growing and putting pressure, quite frankly, on legacy players and on incumbents as well.
Yeah, that makes a lot of sense. Thank you so much for that run through, Pablo. It's fascinating. And on that note, we're just going to take a quick pause here. Back shortly.
This episode is brought to you by Voco Hotels by IHG, where you should prepare to be charmed. From Chicago to Myrtle Beach to Saranac Lake, each Voco in the U.S. has its own local flavor and unique detail. Our hosts welcome you with little extras, and you'll find rooms for catching up on me time and full-service bars and restaurants that are perfect for us time. Come on in and live the Voco life and book your next stay at vocohotels.com. VOCO hotels.com.
Okay, now for a quick look at one more newsworthy story this week that we don't have time to cover in full, but we think you will find just as interesting. And this one is from Financial IT. Zilch and Plaid partner to integrate open banking into repayments. Zilch has partnered with Plaid to integrate open banking into its repayment experience, allowing customers to use the pay-by-bank method for one-off repayments directly from their bank account. So that's exactly the conversation that we've been having today. The integration leverages Plaid's virtual account capabilities, enhancing settlement tracking and refund functionality, which simplifies reconciliation and reduces overheads for Zilch. The partnership comes as open banking usage in the UK reaches 15 million users, so that's nearly 1 in 3 UK adults, indicating increasing customer uptake and the potential for scalable repayment innovations. Zilch plans to release Zilch Pay in the first half of 2026, a one-click button that will integrate its app, digital wallet, and card at checkout, enhancing the shopping experience for customers. So, to give us more information on this partnership, we have a voice note from Joe Zender, Chief Product Officer at Zilch.
Hi, I'm Joe Zender, Chief Product Officer at Zilch, the consumer payments platform, and I'm excited to share that we have just announced a new partnership with Plaid, one of the world's leading open banking platforms. Together, we're integrating open banking into Zilch's repayment experience, giving our over 5 million registered customers an even smarter and more flexible way to manage their payments. With this partnership, Zilch customers can now use Pay by Bank for one-off repayments, allowing them to repay directly from their bank account in just a few taps. It's fast, secure, flexible, and completely frictionless. And the timing is ideal, with open banking adoption continuing to soar in the UK. At Zilch, our mission has always been to make payments smarter, simpler, and more affordable, and partnering with Plaid is another major step towards that. And we won't be stopping there. Next year, we're launching Zilch Pay, our one-click button that brings Zilch directly to online checkouts, so you'll be able to pay, earn rewards, and stay in control of your spending, all in one seamless experience. This is all part of how we're building the consumer payments platform that powers the future of commerce.
And finally, now time for something a little bit different and maybe a bit weird from the world of business to finish this week's show. This one is the fintech Halloween finisher. Which fintech would you bring back from the dead? Discuss. There are many. So first off, that is a large graveyard. Very, very large graveyard. Some for very good reasons. Some unfortunate.
It was a really interesting one. I posed it to the office, actually. I went around the office polling for ideas. Because I think I try and forget them when they've gone. And then I had a little Google. And if you Google how much money was invested in failed fintechs over the last 5 years, that's a scary number.
Mm-hmm.
That's a lot of noughts at the end of that. And then the next qualification was, which ones can I actually say because they didn't get shut down because they were so illegal that they were found to be so bad that they had to go. And the list then gets quite short. But the top one, mine was very boring. Well, mine was safe. So I really liked the Zing travel app, mainly because we provided the account funding for it. But it was a very cool use case. I liked the UX. I thought it looked brilliant, but it just didn't work economically for them. So whatever, they decided not to do it. But I thought as a thing, it looked cool. It worked really well. But the top scoring in the office was actually Football Index. I don't know if anybody remembers Football Index. So where you could, and I didn't know what this was. I had to go and I had to ask the team. But you could effectively buy a share. It was like, I'm going to put it in Ian simplification. So a bit like fantasy football, you sort of invested in the players that you thought were going to do well. And then if they performed well, you got a dividend on their performance. So you could, for the football-loving fun investor, it was quite good fun. Although everyone I spoke to didn't do particularly well out of it, but it definitely scored high on the fun, entertaining fintech, and it didn't get shut down too badly. So I felt like I could raise that one.
I committed a big podcast sin just now and Googled it. And and it does indeed say in that lots of people are trying to get their money back. So that's not a great example.
It's not ideal, but there you go. That was the one that people thought was fun. So but Zing was my safe one, where I said actually that was the one that I really liked.
And Ian, I'm probably going to jump onto that bandwagon as well because you're right. It was just such a phenomenal. It just looked great. People. Honestly, when you saw it, you're like, oh, this is an amazing customer experience. So definitely Zing. But going down that track, I'll say a couple of things, right? There are so many digital banks that started off too early, right? So if you look at Simple, if you look at Injas, prior to COVID, there was some amazing digital banks that, they were doing branchless banking and all this cool stuff. And I think the markets just weren't ready for them. They had great interfaces. They understood the customer experience. Customers just weren't ready. And I think COVID really helped to catapult that need for digitization in the consumer and changing consumer habits and behaviors. And I think if you did get banks like Zinjas or Simple come back, they might actually do really, really well because they had a really good understanding of what customers needed in a digital world. So that would be the ones those would be the ones that I bring back.
Oh, that's such a profound point, Marusha. Yeah, there's definitely a timing aspect to so much of this. Yeah, we had Simple as well. I just asked a few people as well before this, and a lot of people are like, "Oh, Simple." Yeah. That could have been a good one. Any thoughts, Pablo?
Yeah, on my end, I mean, I'll look at the US a little bit and maybe bring back one of the, I guess, OGs of fintech. I think before fintech actually existed, and I mean, I'll say Mint.com.
Mint.
Right. So yeah, so obviously great product, and kind of PFM like product before PFM ever existed, or before fintech ever existed. Known to be acquired by Intuit some time ago, and shut down, merged, whatever with Credit Karma. And yeah, I mean, I lived for a while in the US, was an avid user of Mint.com, and yeah, it was sad to see them go. But users are like massive fans, right? I mean, I still haven't found a PFM app quite like Mint.
Yeah, I'm glad you raised Mint. I'd forgotten about that. You're right, because I think they maybe they made fintech because they were the fintech before fintech, actually. So it's really worth a shout out.
You could probably do a whole podcast, couldn't you? If
Definitely.
People actually went and did some prep on what are these fintechs that didn't quite make it.
Yeah, and which belong in the graveyard for some very, very good reasons.
Yeah.
I mean, one of the controversial, just in chatting to some people before this, one of the controversial, is Nutmeg in the graveyard? Is it in the graveyard? It was just acquired by JP. I'm a full disclosure, I'm a Nutmeg customer. Love Nutmeg. They were acquired by JP Morgan, and they're just retiring the brand. So at least the brand in some ways is dying. It's just quite a fascinating story about what's happening in that sector. So I got to say, everyone, we actually ended up by talking way more profoundly about that than I thought we were. So that's brilliant. And on that note, that wraps up today's spooktacular fintech news. Thank you so much to today's guests. Where can people find out a little bit more about you and your companies? Ian?
LinkedIn, obviously, and then Tink.com if you want to know more about Tink. But give us a call.
Awesome. And Marusha?
So definitely our website, Paymentology.com, go to the Issuer Academy as well to see our podcast, and of course on LinkedIn. Always happy to connect.
And Pablo, where can we find you?
You can find us on Belvo.com and also on LinkedIn.com/Belvo Finance.
Amazing. And as for me, it's on LinkedIn at DavidBG or 11fs.com. Thank you so much for listening to today's FinTech Insider. If you like what you heard, please make sure to follow us on your favorite podcast platform of choice. And if you really like what you've heard, why not share the podcast with a colleague or friend? Go on, do it. As always, if you want to join the conversation, find us on social media. Just search for 11FS or FinTech Insider, or email podcast@11fs.com. Thanks very much, and goodbye.
You know the words that dominate our news cycle.
Private equity keeps inventing
generative artificial intelligence
tax
on home.
America's
chip fueled by market volatility.
Bets on Fed rate cuts.
But do you truly understand how they impact your world and your wallet? In a world that skims the what, understand the why. Because context changes everything. Subscribe to learn more at Bloomberg.com, the global benchmark for business news.